Hello and welcome to Commodity Champions. I'm Anisha Gupta. Well, 2022 has been a roller coaster of an year with all-time highs in copper, aluminum, cotton, edible oils and multi-year highs in crude, gas, sugar, metals and precious metals. And then from those kind of levels, we saw a sell-off on dollar strength as global central bank rate hikes took center stage. The Chinese demand concerns and an impending recession concerns also have taken the commodity prices on the weaker side. So what does 2023 look like for the commodity space? To discuss that, we have a guest joining us. Guy Wolf, the global head for market analysts at Marex, now joins us. Guy, hi, thank you so much for joining us. And I want to start with the crude oil prices itself, because the last couple of years clearly have been making headlines when it comes to crude prices. And this year as well, we've seen Brent hit a high of 139 on the higher side. And then we've seen almost $70 of lows in the year as well. As we move forward from here, what are the fundamentals you'll watch out for? And what's your sense on price range for 2023?
Yeah, I think what we've seen over the last few weeks is very much a reversal of pretty much everything that was happening prior to that. And part of that is an end-of-year effect, I think, as people look to unwind the major trades that are in place. And crude, one of the reasons why other commodities have been going up as crude has come down is because crude very much has been, and gas obviously, very much the driver of global recessionary fears. We had strong metal prices in the first part of this year, and that wasn't causing any concern because base metals tend to be relatively small components of end products. But energy obviously has a very, very material impact on household budgets, and energy ultimately is the building block of everything. So as crude's been coming off, other things have been rallying, and I think that slightly reflects not just sort of hopes that China will recover somewhat, but also the fact that crude actually is one of the few commodities where there probably is enough global supply, and supply can come online, whether it be the US, whether it be OPEC or elsewhere, and can be moved relatively easily around the world. Gas, on the other hand, is much more problematic.
Guys, so what would you look out as fundamentals as we move ahead? Yes, there are recession concerns, the China demand concerns as well into the market. How are you looking at Russia reactions? And as we step into the new year, what are the concerns and opportunities that you look for crude?
Well, I think if 2022 showed anything, it's that forecasts are very, very difficult in today's world. Clearly, there are still major concerns. We don't really know what's going to happen with Ukraine, although obviously, recently Russia has been making noises about a negotiated solution, and clearly that would be a positive. We have to remember, of course, that Russian crude has still been going out into the world. It's not as though supply there has been turned off. We haven't seen OPEC increase production in the way in which the Western world would have liked. So I think more volatility is certainly to be expected. Having said that, I think a lot of the sort of the risk premium perhaps we've already seen. So I'd be surprised if we saw highs next year over and above the highs that we've seen this year, but I'd still expect to see some volatility.
Oh, well, absolutely. So, Guy, I was reading a lot of reports, and the forecast really seemed to be anywhere between an average of $65 to 110 on the higher side for the next year. I mean, what side do you see markets really panning out for most part of the year?
Well, to be honest, it wouldn't surprise me if we saw both of those prices next year. I think, on balance, though, it's more likely we'll see lower prices and higher prices in crude. There is potentially a lot of crude that can come onto the market, and overall, I think it's likely we'll see lower prices.
Okay. Moving on to natural gas, and you mentioned onto that one as well, and we've seen a huge volatility into that one this year. And the concerns are that for this winter, there may be stocks, but moving on for summer and the next winter is where the major concerns could be coming in for. How are you looking at this year panning out in sense of gas?
Yeah, I think, we have to recognize that gas is just going to have a much higher structural level of demand than it has done in the past. Germany built an LNG regasification terminal in an extraordinary short period of time, and actually brought it online this year, I think, having started it in May, and normally they take 3 years. So I think clearly, unsurprisingly, there's a huge strategic imperative to build LNG import infrastructure into Europe, and that is going to keep gas prices high to the extent, the only bottleneck there is the amount probably the US can export and the sort of shipping capacity of LNG. But I think realistically, if gas prices ever did drop, then clearly there would be significant sort of state-led demand in order to keep inventories as high as possible in this current environment.
Guy, macros, rather the micros is one thing. I mean, the individual fundamentals is something that the markets are watching out for. But clearly, the second half of this year was all about dollar index, the kind of highs it hit, and the kind of decline that led to buying into commodities back yet again. How are you reading into the global central banks going forward from here? And is there a range that you're working with for the dollar index?
Yeah, I think we're still very much in a macro-driven world, to be honest. I think, again, as I said, a lot of the perhaps the aggressiveness of the moves that we've seen in recent weeks is a function of the unwind of a very, very strong trend for macro funds and CTA funds that come up until that point. I think there's still a lot of uncertainty. We don't really know how China is going to rebound and at what pace out of the end of COVID zero. I saw this morning they've just delayed their economic announcements for next year as we've sort of seen a surge in COVID cases. So it's not really clear exactly the path that China is going to take out of the lockdowns that they've had. Secondly, there's been a lot of contradictory noises out of the Fed about the pace and ultimate peak in US rates, and I think we need more clarity on that. Europe has been lagging in terms of rates. So yeah, the dollar very much had everything behind it for a period of this year with, it was raising rates the most aggressively, had the highest rates, and actually had the highest growth rates in its economy. So that was really sort of everything was pushing towards dollar strength. And yet more recently, we've seen very contradictory noises where we thought maybe we knew where the end of the rate cycle was. And yet since then, we've seen exceptionally strong economic data and noises that perhaps rates need to go higher than were previously thought. So I think the first quarter of next year will still see very much macro-driven markets. I think it's probably more likely the dollar will see a rebound as the US perhaps firm up its guidance about where rates will go to in the US. And because the US is effectively energy self-sufficient, ultimately that gives it an enormous growth advantage over the rest of the world in this environment. So I think it's probably more likely than not that we'll see a rebound in the dollar in the early part of next year.
Okay, to the metals then, and we saw an all-time high in copper and aluminum today, and multi-year highs in zinc and nickel, of course, is a story to remember in what happened this year. Within metals, are you picking up on something for the next year?
Well, we did see higher copper prices earlier this year, but I think they are, copper and nickel in particular, incredibly sensitive to Chinese demand. And although we're sort of still around about the $8,500 per ton mark in copper, if we think back, say about four or 5 weeks ago, the first time there were sort of potential noises about the end of COVID zero policy in China, copper went up by $1,000 a ton in 2 days. So that shows you a level of the sensitivity of Chinese demand to the copper price. So copper and nickel in particular will be very much driven by whatever happens in China. I think zinc and aluminium are, again, cannot avoid the macroeconomic or geopolitical situation. There's significant production in Europe, which has been impacted by the invasion of Ukraine, and both of those products are very sensitive to the cost of power. So that will very much drive those metals.
Guy, also, when you look at the chart of last 1 year, 3 years, or even 5 years, perhaps, we've seen precious metals give you as much or higher returns than what equities have done. And yes, precious metals do stand strong. What's your sense going forward into this? Do you see this pattern change?
Well, I think gold has always had this safe haven characteristic. So it doesn't surprise me particularly that it's held up relatively well, even in the midst of the huge dollar strength we've seen. And then obviously as the dollar has corrected quite aggressively, gold has rebounded nicely as well. So I don't see, in the short term, it's hard to see gold sort of losing its luster. We have seen that perhaps 3, 4, 5 years sort of post a crisis where sort of people sort of are a lot less interested using gold. However, having said that, I think that probably the biggest obstacle for gold in sort of more medium term is now interest rates are offering a reasonable yield. Then obviously gold offering no yield doesn't look necessarily perhaps as attractive relative to treasuries. Silver, I think, has got a more interesting characteristic. It's quite an important input into solar panels, and that's obviously would expect increased investment in renewable technology in Europe in particular. And so silver demand could actually see benefits from that.
All right. So the precious metals do stand tall from here on as well. All the fundamentals that we've recounted on are supportive of the precious metal buying. Guy, as always, thank you so much for joining us, and thank you for making time for CNBC TV 18 today. With that, let's slip into a short break. We will continue discussing the 2023 outlook for the commodities on the other side. Joining us would be Pritam Kumar Parnik of HNI and NRI Business and Kunal Shah of Nirmal Bang Commodities. Welcome back, and joining me now to discuss more about commodity space is Pritam Parnik and Kunal Shah. Both of you are welcome on the show. And Kunal, let's start with you. And we left the previous discussion at precious metal prices, and gold and silver seem to be closing this year in the positive in the rupee terms, not so much in the dollar terms yet. But going forward for 2023, which one would you pick on, and what are your targets for this year? Kunal, you're on mute. Kunal, you are on mute. We can't hear you.
Yeah, so extremely sorry. So we've seen that in the previous discussion, the major point was there is a lot of uncertainty. I think the macro, which is going to drive the market. So when it comes to the geopolitical tension, we don't know what is going to happen with Russia and Ukraine, whether it is going to escalate further. China, US, Taiwan, that issue is going to escalate further. But it seems that the geopolitical tension is going to increase rather than decrease. So that is the number one case to hold gold right now. Second is regarding the monetary base of most of the Western central banks. What they've done is they've expanded their base like anything. They are cutting down the balance sheet bond purchase program. They are selling bonds in the market. We've seen almost $400 billion of redemption by them. But in spite of that, the inflation is relatively very stickier. Going forward, I think the major concern is the pace of rate hike is going to be moderated. And later during the year, sometimes, maybe second half, we are going to see that even the QT which is going on will stop at some point. And they will talk about, rate cuts after that. So we are in a vicious cycle right now. And in this vicious cycle, gold is going to be your best friend, because everything which is happening in the world is positive for gold. So it is very difficult to predict the long-term target for the gold, but it seems it is going to break its all-time high, and it is going to move up quite significantly from here. So my high conviction strategy would be going long in gold and silver. Gold next year, conservatively $2,000. Silver conservatively next year is going to test $28 to $29 or perhaps $30. So these are my high conviction ideas for 2023. And I would say precious metal is going to outperform many asset classes going forward.
All right. It already seems to be doing that in the last 1 or 3 years, and perhaps could continue doing that, is what Kunal's saying. Let's talk about the base metal prices then. And we have seen gains come back into this one. If you look at the last 1 month, most of the metals actually are trading in a positive side. Pritam, would you say that's how we will enter 2023 as well? And what top picks would you have in the industrial metals, base metal prices?
Manisha, honestly, we are a victim, or we are a slave of what China does. Unfortunately, that's the most opaque country to get data from as far as economic data goes, or anything to do with COVID. So that's going to keep the market interesting. So there's going to be a lot of volatility for traders over there, needs to say. But my sense is that, we've seen that any positive news that kind of comes from China, it tends to overtake any negative news which is there relating to, recession or the likelihood of US markets, all the global markets going into this.
Okay, so clearly China is going to be quite important there. And well, yes, he rightly put that we are slave to China when it comes to industrial metals and various other industrial agriculture commodities also for that matter. Kunal, what is going to be your top pick when you look at the base metal prices? Because most banks seem to be still putting a lot of faith when it comes to copper and aluminum for the next year as well. Iron ore seems to be yet another gainer there.
Yes, when you talk about the upside, potential upside, it is only because of the China opening up. We have seen the Chinese demand contraction lasted from almost last 4 months, and that remained prime reason why metals were not able to outperform in last 4 months. But now, if China is opening up, there is going to be, the word they use is revenge demand. So 4, 5 months, 6 months of slack demand, suddenly liquidity pumped in by the government in the real estate sector. Again, the old model of economic growth starts taking in. So this will lead to some revenge demand in the market, but it is a short-term phenomenon. So in a first half of the year, yes, like you rightly said, copper can still move up, can surprise everyone and test levels of 9,100. But I am not very bullish because at the same time, when this the moment revenge demand fades, the overall housing market of China is not going to recover the way it used to. So not very optimistic, but yes, in first half, we are likely to see copper can edge up and test 9,000 to 9,100 US dollar.
All right, so still putting all the faith in copper, not all-time highs perhaps, but a good rebound from these current levels right now. Pritam, sorry, we lost you. There was some technical glitch there, but you were saying, and what is your favorite metal out there?
So out there, I think it's copper. Reason being, apart from demand, there is also constraint in supply. You see inventories are running low across the globe for copper. Mining out, if you were to see the trends or the trends that miners are putting out, are also saying that the output is going to be significantly impaired in the coming year. So I think that is going to help copper prices to be very strong. For the next coming year, financial year, calendar year, what I mean to say. And my sense is that currently the first level that I look at is around 730 levels in Indian rupee terms, and then the next could be even in excess of 775 to 800 rupees.
All right. So copper continues to be the top of the pick there. And yes, the fundamentals are strong. Apart from construction, it also is about renewables, 5G, the green energy. All of that is something that requires copper, and that continues to be in the hot seat there. Let's talk about energy there. And because India imports more than 80% of its requirement, this is one area that is watched with keenness. And as Guy was mentioning earlier as well, other commodities may not be so much of a case, but when it comes to energy, it does disrupt your budget in more ways than one. Kunal, how are you looking at the crude oil prices? Because as I was mentioning, $65 to $110 of an average price is what banks are putting out for next year. What side are you bending?
First, I'll explain the fundamentals and then I'll give the price outlook. The fundamental of oil right now is not very bullish. The reason for that is the production cut which OPEC did announced in the month of October, November. And right now, the status is that oil market is in a surplus of 1.5 million barrels per day. And with OPEC did production cut of 2 million barrels, out of which only 1 million barrels of production cut took place. So this is a market with a huge surplus every day building around. Second, now coming to the main point. Now, what is going to be the role of OPEC Plus going forward? I believe that somewhere, in the month of January, February, I think the meeting is in February, they would realize that this market requires production cut and eventually there will be a cut. So the moment that cut comes, you will see some pullback. But the fundamental of oil is not looking very lucrative. I would still stick out my neck and says, yes, it can test $65, $66 for the WTI, $70 for the Brent. And on the upside, the maximum upside for the Brent would be 84, 85, and for WTI, it will be maximum till 80. So this is the range what I'm expecting broadly. And looking at the way the global economy is likely to slow down in the first half of the year, the likelihood of major rally in oil is very less. If there is a major production cut announced, then only it can rally. Apart from that, I don't see any real reasons why oil should really rally and test $100 or something like that.
All right, that could really be good news for a consuming country like India, where our rupee, our import deficit, everything depends on crude oil prices there. Pritam, how are you looking at the natural gas prices? Because that has also lasting impacts, and we've seen a big volatility and a big range onto that one. How is 2023 looking to you?
Unfortunately, the most difficult thing to predict today is the weather, because obviously La Nina factor has been changing the weather patterns across the globe. When we started off last month, there was a lot of talk about saying how hot this winter season is going to be, and lo and behold, we saw natural gas prices tumbling, and then it recovered because obviously they are seeing much more colder patterns. So this is going to be very difficult to play out. But my sense is two things. I think that globally, one thing which people have digested surprisingly well was the Russian news, right? I think Russia supply has been factored in. Now, with winters very much being there and people factoring in what is going to be the requirement, my sense is that natural gas is going to find it a little difficult to kind of trade in excess of this, in Indian rupee terms, about 600. I think 580, 600 is a very strong resistance in Indian rupee terms. My sense is that to breach that, there has to be something more significant. But I don't see anything on the cards per se to say that the trend is going to be very, very bullish in the coming years. That said, I reserve my judgment because you can never say the global economic conditions as well as the geopolitical conditions are so volatile these days. You can never know. You can always have a surprise. But keeping that aside, my sense is that there is going to be an upper carpet in natural gas.
Okay, so a definite buy in precious metal prices and metals. Copper is a top pick here, and the energy prices could see some decline, but volatility absolutely is something that is going to be the name of the game in 2023 as well. Pritam, Kunal, thank you as always. And with that, it's a wrap on this edition of Commodity Champions. We keep tracking all the action in the commodity space and news on CNBC TV 18 right here.